Happy VA Wednesday. So today we're going to be talking about building an investment property profile with VA. Now, it's imperative that you watch this entire video for two reasons. Number one, I'm going to give you a lot of information so that you do not commit mortgage fraud. We're going to do this the right way. And number two, the algorithm really likes it, like support a girl. Now, if you're new to the channel, I am a lender licensed in 48 states. My team's in 50. I've been ranked the #1 VA loan officer for purchases in America 2 years in a row, thanks to you guys and gals. So look, my team and I are here to help. Call us to help you plan. Get pre-approved with us. We waive our lender fee on VA, and we are super competitive. You know why? We want to get you home. So 786-933-2077. Look, I talk about building wealth with VA on this channel a lot because it's something that I've seen. You know, I have many clients where they're buying their third, their fourth, their fifth property with VA. And I've watched as they get rental income from this property, or this one goes up a lot and they sell it to pay off this one. There's so much with real estate that you can do, and the VA loan benefit is an incredibly powerful tool. Now, if you're not familiar with VA, it's important that you recognize it's zero down. There's no mortgage insurance. The rates are lower than conventional. Now, if you're ever talking to a lender and they say that VA rates are higher than conventional, just do this. Bye, and call me. It's BS, okay? VA rates are always lower than conventional because it's a federally insured loan. Also, they are a lot nicer to you based on credit score. So if you have a lower credit score, VA is a great loan as well. Now, here's the deal. So one of the questions my team gets, and I'm going to quote it, Sandy gave it to me here. Can I buy an investment property with my VA loan? No. And you're like, wait, what? You just told me we're going to build an investment portfolio with VA. You just told me that people had all these investment properties with VA. Yeah, let's talk about how they do that. That's the key to this, how to do it. Okay, VA loans are owner occupied only when you purchase. So what that means is that when you're purchasing the house, you intend to live there. Now look, does VA have a specific amount of time that you have to live there? No, but are lenders looking for you generally to have lived there for at least a year? Yes. Now, if you got military orders or something after you purchased, that could be a good reason that you're getting a different home, okay? But the key is, and don't try to manipulate the system, guys. Just don't. Like, don't get cute with it. You can do this the right way, the ethical way, the honest way, the non-fraud way, okay? So when you use your VA loan, you intend to live there, I would say, for at least a year. Now, mentally, when I'm talking to my clients and I'm doing the math in my head, I'm like, guys, you need to try to live there for at least 2 to 3 years in most markets. And the reason is the odds that you're going to be able to get a renter to pay what your mortgage payment is the day you buy that house, it's not high. It takes time, right? You know, depending on what type of investment move you're making, you may be buying it so that ultimately you can rent it out, or you may be buying it so that ultimately, you know, you're in an area that's appreciating quickly, you make a little money. There's two different strategies. And that's something you want to think about when you're buying the property because it will affect what you buy. So you're going to buy the house with VA. You're going to live there for at least a year. I would say 2 to 3. Now what? Let's do it again. Let's do it again. Now, the next question I get, please hold. Can I buy a new primary in the same community with my VA loan? Let's talk about that. So there's two different ways that I see this going. Number one, let's say you're active military. If you're active military, I would be buying a house at every base that I thought was a desirable area. You know, recently I was in Colorado Springs and I was like, wow, I don't understand why everybody's not trying to buy a house when they get here. It's not a market where immediately you could rent it for what your mortgage payment is, but I look at that market 5, 10, 15 years from now and I'm like, this is a safe investment from my perspective. There's a ton of jobs. There's lots of natural beauty. It's safe, from what I saw. Like, it's a nice area. It's an area that I got there and I was on homes.com trying to find a second home because I thought it was so great. That's a good place to buy, is when you have all those jobs, especially if there's all those military bases. We know people are going to keep on coming in, but you also have that tourist destination because of the beauty. Can we talk about the Garden of the Gods? I went fly fishing. Anyways, so I do think if you're PCSing, you should be looking at every base you go to as an opportunity. Doesn't mean you should buy at every base. There's some bases like, I don't know, North Dakota, South Dakota. Do you necessarily want to buy there? I don't know. If you're going to live there forever, maybe, but otherwise, maintaining a property there could be challenging. What are the jobs besides the military? Is anyone visiting there for tourism? It can be a little bit trickier. So just something to keep in mind, and it depends on your personal preference as well. I'm not slamming those states. I'm just bringing up that I believe one of them was actually ranked the worst base that no one wanted to go to. I think it was for the Air Force. Anyways, so that's if you're active, okay? Now, that's easy because it's really easy for a lender to say, okay, you were in Colorado Springs, now you got moved to San Antonio. Great, that makes sense that you want to buy a house there. Now, you may have enough entitlement to have both houses with zero down, but if you don't, you may need to put a little bit of money down. We can do the max mortgage calculation to help you figure it out. So that's the PCS method that we see a lot of while you're active in the military. You don't have to be active in order to work this method. So let's say you buy your first house. Now, if you say to me, Jen, my goal is to buy a couple properties over the next 10 years, then what I'm going to be recommending is, hey, first house, I don't want it to be the biggest and best, okay? First house, 3-bedroom, 2-bath, find a good school district, right? Live there. You need to live there. We're not playing games with this, guys. You need to live there, honestly, truly, at least a year. Otherwise, you are raising red flags. Next house, and this is where the question comes in, can I buy in the same community? If you are trying to buy the exact same size house in the exact same size community, it's going to be real tough to get an underwriter to go for it because they're not going to think you're actually going to move into it. Occupancy is very, very important. It is one of the biggest types of mortgage fraud, and you never want to commit mortgage fraud. So first house, let's say it's 3 bedrooms, 2 baths. You really like that community. Great. Let's have the next house be 4 bedrooms, 3 baths. Let's get a little bigger, and if you're like, actually, Jen, I don't really like that community, but I want to stay in this county. Okay. Do we want a little bit more land? Are we going to be in a school district? We have to have a reason for the underwriter as to why you are physically going to move your stuff out of this house and move to this house, okay? That's why it's really tough. Like, occupancy is such a murky world, guys. I'm telling you that right now. And look, there's a lot of lenders that just go, oh, no one cares. No, they really do care. They really care. I care. I don't want to, if you've seen my video, are you accidentally committing mortgage fraud? I don't look good in orange. I'm not going to jail for you, right? You need to actually want to move in the house. And I would recommend, start with a smaller property, begin, grow, okay? Now, if you're like, well, Jen, that sounds great, but I want to do multi-units. Cool. I love a good multi-unit. I would generally recommend starting with the multi-unit. Now, if you're PCSing and you're traveling around the country, easy. If you have a single family here, you want a multi-unit there, okay, easy. If you're trying to stay in the same county, and let's say you have a 4-bedroom, 5-bathroom, and you're moving into a multi-unit, and you're going to have a 2-bedroom unit, and you have a family of 6, that's going to be tough to get past the occupancy test, okay? So when you're thinking about, I want to build this for my future, you need to be thinking long-term. And that's what my team and I are really good at is, look, the VA loan is not meant to be an investment property loan when you purchase. However, guys, look, if you buy a house with VA, you live there 2 years, you decide that you want a bigger house. Cool, you don't have to refi this. You can just turn it into a rental and buy that next house, okay? So look, yes, it can be done. Is there a limit to how many VA loans you can have? No, we just have to have enough entitlement. And we do those calculations all the time. Now, if a lender says to you, because I've heard this, your COE says 0 entitlement. Dude, it actually doesn't mean that. Sorry, I got a little unprofessional there, but it's just, it doesn't mean that. Like, seriously, the COE itself is like reading gobbledygook. Like, just don't, you know? And if you're working with a lender that doesn't know what they're doing, they're gonna see 0. They're gonna see the 0 and say you're not eligible, but you likely are. So call us, we'll do the max mortgage worksheet. It depends on the county, how much entitlement you've used, but you know, I see a lot of where the real estate agent says, oh, use my lender, they're the best. And their lender's never done a VA loan, or they've done 2 and they're telling veterans they can't get a VA loan when they can, and that's just wrong. So look, yes, you can do this, but yes, you need to go live in that house for at least a year, friend. And yes, you need to be thinking when you're buying this house, is it going to be something that ultimately I want to rent, or am I hoping the value goes up and I can sell it? So reach out. We're here to help you. Look, I want you guys to be as successful as possible. I want you to use every single benefit that you receive. So please, 786-933-2077. You can call, you can text, you can hop on the calendar and pick a specific time. Generally on the front, you're gonna have Sandy and Alyssa, sometimes Christina, Linda, and Amber. Every single one of those women is licensed loan officer, and they are here to help you home. So I hope this video helped. Thanks for watching.